Why so many young people have come to crypto, because crypto completely upends this system. I know people get frustrated in sideways markets. It's just the nature of the beast. It does nothing, corrects for a while, and then explodes out of the traps. And we're kind of in that phase now. There's plenty of upside to come. 90% of Bitcoin's price movements are driven by total liquidity, and 97% of the NASDAQ. And what we see is there's periods where it decouples, and these are the banana zones. It decouples when what we get is the retail frenzy, and the frenzy into the market, cools off, comes back to trend rate of this debasement of 8% or so. But over time, it produces astonishing returns. Trump came out and said the dollar's too high. Guess what? Scott Bessent, who's a macro hedge fund manager, I've known him for 25 years. He understands the game. Trump said the same thing. Everyone said the same thing. The dollar's too strong. And hey presto, the dollar has utterly collapsed.
Raoul Pal attributes the growing interest of young people in crypto to its ability to challenge traditional financial systems. With global currency debasement and low returns on traditional investments, people are turning to high-reward assets like Bitcoin, which has delivered unmatched historical returns and rapid adoption. Pal highlights Bitcoin's strong link to global liquidity, explaining that central banks' actions, such as injecting liquidity and weakening the dollar, create favorable conditions for crypto. He predicts institutional adoption and limited ETF supply will fuel explosive growth in the next cycle, driving massive returns. He concludes that crypto represents the greatest macro opportunity of our lifetime. Despite volatility, he advises patience as market conditions align for a bull run, positioning Bitcoin and digital assets as key players in the future of finance.
This has the most stunning correlation of all time to all assets. So 90% of Bitcoin's price movements are driven by total liquidity, and 97% of the NASDAQ. So here's the real issue here. Why are the rich getting richer, the poor getting poorer? Well, scarce assets keep going up in price. Real estate, equities, art, gold, all of these things. Young people can't afford it. Poor people can't afford it because they've got variable income, which is earnings, and it buys them less of these every year. What's actually happening, what that mechanism is a tax on everybody of 8% a year. A global taxation of 8% a year that you don't understand. You just don't get richer by 8% a year. Add in another 3% global inflation, you're at 11% debasement of currency. That's your hurdle rate to stay as wealthy as you are today. That's a staggeringly difficult thing, considering most asset classes don't produce those kinds of returns, which is why so many young people have come to crypto, because crypto completely upends this system. So they forced into more speculative, higher risk assets that have much higher returns. It's the only way out of the trap. And the trap is driven by this debasement. So if you want to see how close the correlation is, and I'll show the full correlation chart later, it basically drives Bitcoin. And what we see is there's periods where it decouples, and these are the banana zones. It decouples when what we get is the retail frenzy, and the frenzy into the market, cools off, comes back to trend rate of this debasement of 8% or so. But over time, it produces astonishing returns. And that's why Bitcoin looks like this on the log regression channel. It's also still remarkably cheap. Where it ends up at the end of the banana zone is usually the 1 or 2 standard deviation level. We're a long way from that, and that would give us much higher prices. You can't see it on this. But if it were to get to 2 standard deviations, that would put Bitcoin at $850,000. But what we're saying is there's plenty of upside to come. I know people get frustrated in sideways markets. It's just the nature of the beast. It does nothing, corrects for a while, and then explodes out of the traps. And we're kind of in that phase now that I'll talk to you about. When we talk about debasement of currency, you can't see this very easily. But at the top here is, well, these are all of the asset classes that we monitor at Expand, my asset management firm. And you can see that most of the returns of US small caps, REITs, treasuries, preferred stocks, high yield bonds, they're all annualizing at less than 10% a year returns. So owning those assets makes you actually poorer because of the debasement. Once you get to the S&P 500, you're at 12%. Basically, you break even. Divide the S&P 500 by global total liquidity, it's basically a flat line. Only when you get to technology investing, do you start beating the benchmark? And so this realization from the Everything Code is debasement of currency. There are only two assets that matter in the entire world. One is technology, and two is crypto. And crypto dwarfs everything else. It is the greatest performing asset in all recorded history. We've never had anything like this before. So here's Bitcoin since 2012, 130% annualized. That's including 3 gigantic drawdowns. Ethereum at 113 and Solana at 142. So the magnitude of the returns is enormous. The volatility we have to stomach to do it is the game.
Raoul Pal says crypto is booming because it challenges the traditional financial system, especially for young people facing inflation and limited wealth options. Bitcoin's strong returns and growing adoption make it a top choice as central banks pump liquidity and the dollar weakens. He highlights that Bitcoin's price moves with global liquidity and rising institutional interest, setting the stage for a big market surge. Despite ups and downs, Pal believes patience now will pay off as crypto leads a major financial shift.
And it's a matter of, I've told everybody about the don't f this up thesis of how to deal with volatility, how not to lose control of your tokens, because this stuff compounds over time. Bitcoin since 2012, 27.5 million % returns. Again, nothing ever has remotely come close to this. And Bitcoin or crypto is great. Fantastic. Then you look at the NASDAQ versus Bitcoin, it's down 99.94%. Crypto is a super massive black hole that simply outperforms and sucks every other asset dry. This is the big one, the biggest one we've ever been given, the greatest macro opportunity of all time. We've got the central banks debasing currency, which is giving us a gigantic tailwind. They don't want the system to break, so every time something happens, they inject more liquidity. So they're giving you free money. And to take that money, you need the volatility. And when we look at that economic data, Bitcoin's already priced it in. It's already priced in, weaker than the economic data itself. So what are we fearing right now? What are people worried about? People are worried about what they're doing is creating narratives for today to explain liquidity conditions from 3 months ago. That's the ridiculousness of what goes on Twitter all day, is a lack of understanding of what actually drives these markets. What are the dominant factors? The dominant factor is financial conditions, which lead liquidity, which lead markets. And even in markets, it's gold actually follows financial conditions the closest. Then with a lag, it becomes crypto and tech. Then with a lag, becomes the S&P 500, cyclicals, commodities, all of those things. So what causes the volatility? Well, it's actually driven by liquidity again. Once you come to narrower time horizons, liquidity changes things. So we've just gone through a 3-month period of the market feeling and everyone's saying it's all over, we're never going to have alt season, everything's terrible. What was actually happening was the fact that in Q4 2024, financial conditions tightened. And we measure financial conditions by the dollar, rates, interest rates, and oil. All of those went up in Q4, and there's a 3-month lag, and it drives it. So people are talking about recession now. We've had this negative GDP print. A lot of this is technically driven by the imports that are happening to load up on inventories as tariffs come, so people don't have the price shock. Okay, fine. So most of this is going to get unwound. Why? Because global growth is about to pick up super fast. Trump last time around, same thing. The markets priced in tariffs. The dollar screamed higher. It created this weak patch of growth. And we haven't started yet. And it's a cyclical thing. It's not the end of the dollar. That's another narrative you read. There can't be the end of the dollar right now because 87% of world trade is in dollars and 50% of the entire world's debt are in dollars. So that's 200% of global GDP is actually in dollars. So there's a shortage of dollars globally, and that won't go away for a long time. So the dollar's collapsing. This kind of thing is a massive tailwind. As the dollar weakens, it means that the more global exports pick up. Everybody who's a foreigner who services US government debt, it's cheaper to service the debt, costs them less of their domestic currency cash flows. So it's a very powerful setup. A weak dollar is incredibly good for world growth. It allows China, everybody else to start exporting. The whole world economy starts picking up. The last time this happened, the Trump cycle, well, that was the initial correction that we got. We had this whole period of correction, much like we've had now. It stopped in about March. Well, we got to about April. And then we did this. And from that correction low, it did a 23x. Now, I don't expect Bitcoin to do a 23x because this was much earlier in its adoption curve, but some of the others will, something close to it. We've got a perfect setup, one of the best setups I've ever seen.
Raoul explains that Bitcoin's price is closely tied to global liquidity and a weakening dollar, which creates strong conditions for crypto to grow. Institutional adoption and limited supply are driving what he calls the biggest macro opportunity ever in digital asset. He stresses that market dips are normal and patience is key, as crypto is set for a major breakout phase. Increasing interest from institutions and rapid adoption suggest big gains ahead, making crypto a powerful alternative to traditional investments. How does a weak dollar influence Bitcoin's growth? What's the best way to handle crypto's ups and downs?